Hey everyone, so you've saved up a little bit of money? Awesome. But now what? You hear people talking about investing, making their money work for them, but it all sounds so complicated and honestly a little scary. What if you pick the wrong thing? What if you lose it all? I get it. The fear is real, but I'm here to tell you that getting started is way easier than you think. Today we're going to break down exactly where a beginner can put their very first investment, step by step, with zero confusing jargon. First things first, let us get one myth out of the way. You do not need thousands of dollars to start investing. You can literally start with the price of a few coffees. The most important thing isn't how much you start with, but that you just start. Time is your best friend when it comes to investing, thanks to something called compound interest. Think of it like a snowball rolling down a hill. It starts small, but gets bigger and bigger all on its own. So, where should you put that first bit of cash? For most beginners, my top recommendation is a low-cost index fund or an ETF, which is an exchange-traded fund. Whoa, okay, that might sound complicated, but it's not. Imagine, instead of trying to pick one single winning company, like trying to find a needle in a haystack, you just buy a tiny piece of the entire haystack. That's what an index fund does. For example, an S&P 500 index fund lets you own a small slice of the 500 largest companies in the US. Why is this great for beginners? 1. It's automatically diversified. Your money is spread out, so if one company has a bad day, it doesn't sink your whole investment. 2. They have super low fees, meaning more of your money stays invested and working for you. And 3. It's a set-it-and-forget-it kind of strategy. You don't have to watch the market every single day. History has shown that over the long term, the market has consistently gone up. The key is to think long term. Investing isn't a get-rich-quick scheme. It's a get-rich-quick slowly and steadily plan. There will be ups and downs, but by staying consistent and not panicking during the dips, you're setting yourself up for future financial success. So, do a little research on low-cost index funds from reputable providers, open an account, and put in that first dollar. You're not just buying a stock. You're buying yourself future freedom. I hope this helped take some of the fear out of investing. Thanks for watching, and I'll see you in the next one.